Investments. Debt and equity securities issued by other companies or government. Marketable securities. Other companies, stocks or bonds that can be readily sold on stock exchanges or other markets. Classified as part of current assets. Book value. The value that the accountant records on the books. Market value. Price at which the item could be sold in the market. Fair value. An arm's length price at which the buyer and seller would be willing to transact. When investor lacks significant influence. Consolidated financial statements combine the financial statements of the parent and the subsidiary, each period into a single aggregate set of financial statements as if there were only one company. Held to maturity. Debt securities usually have a specific maturity date. The investor may have the positive intent and ability to hold the securities to maturity, used for debt that is planned to be held for its entire life. Unrealized holding gains and losses not recognized, reported on the balance sheet at amortized cost. Trading securities. Investments in debt or equity securities acquired principally for the purpose of selling them in the near term, and realized gains or losses are recorded in a valuation account called fair value adjustment, or as a direct adjustment to the investment account, recorded as a net and realized holding gain, loss on the income statement. Financial statement presentation, TS for 1, income statement and statement of comprehensive income. Fair value changes are included in the income statement in the periods in which they occur, regardless of whether they are realized or unrealized. Investments and trading securities do not affect other comprehensive income. Financial statement presentation, TS for 2, balance sheet. Securities are reported at fair value, typically as current assets, and do not affect accumulated other comprehensive income and shareholders' equity. Financial statement presentation, TS for 3, cash flow statement. Cash flows from buying and selling trading securities typically are classified as operating activities, because the investors that hold trading securities consider them as part of their normal operations. Securities available for sale. Investments in debt or equity securities that are not for active trading and not to be held to maturity are classified as available for sale, and realized gains or losses are recorded in a valuation account called fair value adjustment, or as a direct adjustment to the investment account, recorded as a net unrealized holding gain, loss and other comprehensive income, which accumulates in accumulated other comprehensive income. Transfers between reporting categories. At each reporting date, the appropriateness of the classification is reassessed and reclassifications may occur. Any unrealized holding gain or loss at reclassification should be accounted for in a manner consistent with the classification into which the security is being transferred. Securities are transferred at fair market value on the date of transfer. Disclosure. Impairment of investments. Occasionally, an investment's value will decline for reasons that are other than temporary. This is an impairment in value. For HTM and AFS investments, a company recognizes an odd impairment loss in earnings. Odd decline for debt securities can be quite complex, for both equity and debt investments. After an odd impairment is recognized, the ordinary treatment of unrealized gains in losses is resumed. US GAAP for investments permits classification as HTM, AFS, and TS. No significant tests are required to classify a debt investment. There is no comparable FVTPL or FVTOCI classification. IFRS for investments. Investments in debt securities are classified as either amortized costs or FVTPL. To be classified as amortized cost category, two important tests must be met. The current financial crisis qualified as one of those circumstances. Investments in equity securities are classified as either FVTPL or FVTOCI, a little similar to AFS. Investor has significant influence. Use equity method. Equity method. Investor recognizes investment income equal to its percentage share of the net income earned by the investee rather than the portion of that net income received as cash dividends. Initially, the investment is recorded as cost. The carrying amount of this investment subsequently is increased by the inverter's percentage share of the investee's net income, decreased by dividends paid. Fair value changes of investment are not accounted. Fair value option. GAAP allows companies to use a fair value option for HTM, AFS, and equity method investments. The Investment is carried at fair value, and realized gains and losses are included in net income. For HTM and AFS investments, this amounts to classifying the investments as trading. For equity method investments, the investment is still classified on the balance sheet with equity method investments, but the portion at fair value must be clearly indicated. Consolidation. Consolidated financial statements combine the financial statements of the parent and the subsidiary, each period, into a single aggregate set of financial statements, as if there were only one company.